everyone, my name is Steven Bushong. I'm Associate Editor at Solar Power World magazine. I'd like to welcome you today to Solar Speaks Live. Today I'm with Graham Smith, founder of Open Energy. Open Energy is a finance platform for commercial solar projects. Before Graham was at Open Energy, he built a firm in London from scratch to $15 million in revenue. He also successfully co-ran a credit brokerage firm. Graham, welcome.
Thank you very much, Stephen.
Can you tell us what Open Energy does, what your company does?
So, Open Energy is an online solar financing platform. We provide project financing for commercial and industrial projects in the US. We provide financing for new build. So the analogy is like you want to build a house, we'll provide the bridge loan to build it, and then once you've built it, we'll provide the equivalent of the mortgage.
Okay.
So we want to empower developers to go, once they're ready to build, to go through construction, say 6 months, and then once they've built it, we can allow them to essentially own it long term. And our loans are senior so that they have recourse to the asset.
What does that mean, senior, so it has recourse to the asset?
So they're great question. So that means that, again, it's a bit like a mortgage, that we believe in solar projects. So our security, if you like, what happened in a worst case scenario, if it doesn't work out,
okay,
we would end up owning the asset. So we don't come after the owner. That's it. We don't. It's totally around the project.
But you believe in solar, so you're willing to take that risk.
Exactly.
What's the nuance? I've always wondered, what's the nuance between a commercial and an industrial project? Is there one, or is it just something that people kind of say?
I think it's a bit like the potential we're all talking about. It's like, what do we name that? Utility is utility, and residential is residential, and commercial industrial is a name that brands. It's bigger. It's like, it's not your house or mine.
Right.
It's not your apartment roof or my apartment roof. It's the warehouse, and it could be commercial, and it could be industrial.
Sometimes they loop government into that, I hear.
It is. Oh yeah, absolutely. Yeah, it could be. It could be greenfield as well. Like just like our first project we first financed in Georgia was in a field.
Okay.
So you couldn't. It's not really commercial. It's not industrial. They call it greenfield. So yeah. So government, commercial, industrial, greenfield, lots of names. So I think when someone comes up with an amazing name for this little area, CNI.
CNI, that's it. What's going on in the commercial market? That's the market you service through Open Energy. Yeah. Has it stagnated? Is it growing? What's happening?
I think I'd characterize the market as having lots of potential. And if we contrast it to the residential market and the utility markets, we can understand where partly the potential is, but why actually they're not tracking them in terms of growth currently. The residential market has found a model that is financeable, in terms of the way that the size of the systems, so the physicality of them, they're pretty similar, and also the contracts and the processing of the financing, and in terms of timing and predictability. And homogeneity is there. And the utility market, on the other hand, there has been pretty consistent. So there are large-scale projects. You've got the same or similar finance houses. And to be honest, there's relatively few people that can finance these large projects and also can build them. So it's a predictable market. Commercial market in between, however, ranges in scale. So you've got, say, a plant that could go on a school, maybe 20 to 30 to 50 kilowatts, but you could go up to 5 megawatts, which is 10 times the size, and might be on maybe the very largest warehouses or an open field. And that's a big range. And so what we're seeing is the challenge for the commercial market is that there isn't a simple process, the documentation is different, and the financing available is less. It's just less available.
So is it an extended process? I mean, there are commercial projects developed. How are they getting their financing right now?
Well, Open Energy is proud to say that we're helping finance, we're already financing projects.
Great.
And the challenge, if you like, is creating it's a bit like a credit card. You know, when you go and get a credit card,
Oh yeah.
you kind of know what you're getting. You know, you don't talk to Capital One and say, hey, I'm going to cross out this bit. It's here's the deal, and then there's a familiar process. You enter certain bits of information, they ask of you, they review the information, you sign the contract, and then you're done.
Okay.
If you can, what we're trying to do is create an analog to that. That there's a contract, there's a set of information required to review about the solar project, so how much revenue it produces, how much cost it took to build it, how much the energy priced coming off it is, all those kinds of things, and then there's the contract for the loan, for instance, that we provide for against the solar project, and those things are very different right now. It might be a very different size project. The pricing structures are different, so it's very heterogeneous, and so that makes it challenging. There's no one size fits all.
Right.
So what we want to do at Open Energy is work towards a one-size-fits-all. So then, when different borrowers with different shapes of projects, different states, different subsidies come to us, we can accommodate that.
So, correct me if I'm wrong, but it seems that you have an interest in both the commercial solar, the person who's being financed, as well as the person investing. How do you balance these interests?
Coming back to the structure, we using technology and our online platform, we're able to create transparency, because it is an area that fundamentally it's about project finance. So we look at the solar project and we say we are going to lend to that asset based on the electricity coming off it and how that's paid for.
Okay.
Because we're saying maybe the power is getting bought by utility over 15 years at 10 cents a kilowatt hour. Okay, that's a stable source of cash coming off it, so we can lend.
Understood. Is solar a low risk investment?
That's a very good question.
Specifically for commercial, especially.
I think what I do is I turn it around a little. I'd say, if you understand what you're investing in, caveat emptor, so buyer beware, then you can make that call. So if I said to you, is Apple a high risk investment? You'd probably come back and you'd have your own view on Apple, and risk then is framed in terms of what you know about it. And the problem with solar is that people don't know about it. They don't know where the risks are. So what we're doing is we're creating a platform that makes the information accessible for accredited investors and institutional investors, so they can determine that level of risk they're happy with. That's the fundamental thing. It's saying, okay, I understand this investment. I am getting X payments over 10 years, and this at 7%.
You're streamlining the investment risk analysis.
That's right. Yeah, exactly. It's if you want to. If you didn't know anything about Apple, and you didn't know, you had to read a big book of 500 pages, you'd be like, well, probably not going there. It's just too difficult. I'll choose some. But if it is accessible and explained in simple language, how you're going to be paid, how the project gets paid, then you could probably get a bit more comfortable. And I think that's solar in general. It's explaining a lot about itself and saying these are the financing structures. It's a loan. Okay, I understand a mortgage. I understand a bond, for instance, or what have you. And we're doing it's the same thing.
Is there a type of commercial property that's less risky for an investor than another type of commercial property?
I'd say an interesting point to start that makes it you can relate to is if we were going to install, or we were going to provide a loan to enable a developer to build a solar project on a school.
Okay.
Schools
tend to stick around for a while.
Exactly. And actually, here's an interesting point. They're built, because you'd put it on the roof. Schools are actually built structurally to withstand a lot of natural climate events.
Right.
You'd expect there'll be kids inside, but they are. So why that's important is to make when you put them as solar panels on the roof, exactly as you say, the school's going to be around for a long period of time. These solar panels are going to be around for a long period of time. So that is encouraging. It's not likely to fall down. So the solar panels are going to be there for a while. It's also going to be the school that buys the power. Hey, they're going to be around for a while. So you've got a consistent means of paying. So when you lend the money, okay, well, that's how they're going to pay for it because the school's there. And as it happens, the school is formally generally rated along the municipality lines, and they tend to have quite strong credit. So that's reassuring. So that on a official like Moody's or S&P's, they have a rating effectively. So that people paying for the electricity are pretty solid.
When open energy processes risk, you're probably looking a lot at a commercial property's past history, right? Is that one of the primary considerations that you make?
Very much so.
I mean, because I'm thinking about a dealership in the city where I live, Cleveland Heights. It's been around for decades, and they've just built, a solar carport over top of some of their lot.
It's a great idea.
Yeah, because they'll probably be around for a little while.
Yeah, that's right. The cars, we're looking at, they're building a new, so you look at the structure, that's the first of all. So that when you say they build a new carport,
right,
that's a pretty strong sign, new structure, so more likely to have a good life ahead of it. First point. And then we look at the car dealership, and then we'll say, well, that's where it gets a bit more complex. Then you have to look at, for instance, the balance sheet. Is it a healthy company? Are they going to stick around? And there may be an arrangement whereby if they don't buy the power, they might sell to the local utility.
Okay.
So that could be an interesting twist that is a positive for everyone involved.
Do you have any financing partners that you're working with currently?
We're delighted to be working with GLI Finance. They're also an investor in our company, so we're delighted with that. And they have also provided us with funds that we can lend, so that's exciting because it enables us to essentially when we find a project we're excited about, we can, once we've done our due diligence and prepared the loan, we can lend straight away, and then allow it essentially presented on our platform for investors.
Okay. Well, I'd like to ask you about your outlook for the commercial industry over the next 2, 3, 5 years. What do you see happening?
I couldn't be more excited about it.
Okay.
Because of the potential we spoke about. An anecdote I often use is when you leave, when you take off in the plane from the conference, and you look out of the window, if you can see warehouses, and you probably will,
yes,
and you look down, I'm guessing they probably won't be filled with solar panels.
They're never.
And there's a lot of warehouses around the US, basically. And we're not just talking about warehouses, but schools and churches. We put panels on schools, on churches, on shopping centers. There's a lot of rooftops. And there's a democracy about it that allows, once you put panels on these locations, they're effectively, in a way, powering themselves. Okay. So if you add storage into it, they become potentially fully independent. So the outlook is there's incredible potential, and what we're doing is we're getting into the weeds of it and saying, how do we provide a loan just like you want a personal loan, you want a credit card, you want a mortgage, something that the borrower, they know where to go, it's a predictable process, they understand the process, it's not, it's not obfuscated, it's clear, they just, you know what I mean, it's what we know in very many other areas of finance, and it's accessible, and we want to bring that. And so we want to create this product that is fully understandable and can be rolled out easily.
All right, Graham, well, how can somebody learn more about your company, Open Energy?
We would love to talk to them, and we'd love to have them visit our website. So openenergygroup.com. There's an online loan application process. We are available on the phone as well to support the borrower as well.
Very well. Well, Graham, last question, I swear. Yeah. I heard you were in the Olympics.
I was.
What did you do in the Olympics?
I rode for Great Britain in the 1996 Olympics in Atlanta in the men's eight.
How'd you do?
Came 8th.
8th. I think that's pretty good for the Olympics, right?
Thank you. It's as I get older, I think I get more excited about it.
All right, well, Graham Smith, founder of Open Energy, thank you so much.
Steve, thank you very much.
This has been Solar Speaks Live, powered by Unirac. Thanks for watching.